Good everyone, I'm going to be analyzing the Forex market, basically the dollar index, Euro USD, and British pound. I'm going to be also giving my bias on where the market is likely to go. Now, every concept I'm going to be using here are all ICT concepts. I've learned under ICT for 3 years now. Now, nothing I use here is my everything is for ICT. ICT concept, I really believe I'm going to set the standard for every retail trader for time to come. I'm actually grateful for his impact in the Forex industry. Then I would like to warn that I'm not a financial advisor. I'm just a normal guy on the internet who is giving my own opinion on the market. This is the dollar index, and this is the monthly time frame. Market rallied from this point here, this consolidation. It rallied, retraced, and then now it's consolidating. Since January last year, the market has been ranging on the monthly time frame. In this consolidation, it has taken this low and it's also taking this high. What we find above and below the high and low of the market is called liquidity. So market took this low and then took this high and then retraced down into the consequent encroachment of this week from the close of this down candle to the low of this down candle. The midpoint is called consequent encroachment. And then look at how price reacted. It served as a support for price for this down movement. And then price rallied into this fair value gap. Now, this fair value gap became an inversion fair value gap. By the time these three candles were printed, it formed a fair value gap. This space between the high of this up close candle and the low of this up close candle, this gap here. So price was delivered the buy side imbalance, sell side inefficiency. So price need to come back down and close this gap here. Price did that and then it went back to retest it. We traced down into this order block and then rally. This month of May, we are seeing price finding support in this inversion fair value. So let's move down to the weekly time frame. So now from this low to this high is a range called the dealing range. Now what makes this a range? It took this high, the liquidity here, the buy side liquidity, and then took the low, the sell side liquidity below these lows. So it has taken liquidity at both sides, forming a range. So inside this range, you would find an equilibrium. That is the midpoint from the high to the low. Now, if you look at this midpoint, price has left equilibrium to a part where we call premium. So this upper portion is premium, lower portion is discount. Now, price took this low and then rallied, forming the range, then it consolidated with failure to break this high, forming what we call relatively equal highs. Price came down, created a fair value gap, consolidated at the equilibrium, retraced back into the fair value gap, like I explained. The low of this up close candle and the high of this down close candle is forming the fair value gap. So this is the fair value gap, and it's a weekly fair value gap. So price came, found support, and then came down to this consequent encroachment of the monthly week, if you could remember, and then found support down into the discount. Because you can see here, this is the discount, this is the premium. It came deep down into the discount and then rallied. After rallying, price came down, it retraced back to the inversion fair value gap, which I explained before. When price came down, formed the fair value gap and then found resistance a little bit and then break through it, found support and then rallied, then came down, then found another support, then rallied. Then you can also see these three consecutive down close candles form the weekly order block. And once price breaks above this high, it validates this weekly order block. The price came testing this order block. Many of you may not know what I'm talking about, but I want you to keep listening, keep coming, because I'm going to be releasing more episodes that will be explaining this concept in detail. And then for you that also may be familiar, but you still want to refine your skills, I would advise that you keep coming and you will learn more from the weekly analysis I'm going to be putting out here on this YouTube channel. All right, so now we see a lot of confluences here. Now, once price broke this high, it retraced down towards this inversion fair value gap. So this monthly order block, if you can remember, monthly order block. Let me just go back so I can show you quickly. This is the monthly order block. Price retraced to the monthly order block. So now we'll go down to the weekly. And this is it here. So we are seeing the monthly order block here that price is reacting from, and then the weekly inversion fair value gap price is reacting from, and at which point? At equilibrium. For price finding support at equilibrium. After that, it rallied and then broke this high. After which you retrace down into what this bullish weekly order block. And then note something here. Price took liquidity below the week. Now, the week I'm talking about is WEEK, below this week, not the shadow. I'm talking about the whole week here. Price took liquidity and then rallied. And then finding support at this bullish weekly order block here. This is where we are. And then we've been consolidating for a while. Price is still bullish. I expect that price would break these two relatively equal highs and then break these two relatively equal highs in the weekly time frame. So now let's go down to the daily time frame. So the chart is becoming messy. So I wouldn't want to explain a lot of things are here, but I just want to give my bias quickly because of time. So now we all understand how from the weekly time frame how price moves from this consequent encroachment of the monthly week upwards. Now you can see something happening here. How price was consolidating. Where at equilibrium. This blue line represents the equilibrium. Let's go back to the weekly so that we'll see it clearly. This blue line is the equilibrium. This is the premium. This is the discount. Then within the premium can be further divided into two: deep premium and discount. Deep discount and premium. So you can further also divide the deep discount into two here, but we're not going to do that not to complicate things. So let's go now quickly to the daily time frame. So now price rallied from this consequent equipment and then retraced down. Now, why do you think price retraced down to this point? There was something here, which is the price imbalance here. Price retraced down, finding support at the weekly inversion fair value gap, which we saw in the weekly time frame, taking out liquidity, and at the same point at the equilibrium. And then price stalled for a while, broke structure, created a fair value gap, retraced, and then found support. Interbank price delivery algorithm, IPTA. Now you can see the past 20 days, there was a high created, there was a low created. Price tends to seek liquidity. It's called open floats. Now you can see this is the two open flow we can have here, but let me explain what I mean. This is the month of May 1st. You count 20 days backwards. The highs and low, they are liquidities resting above open float where price would like to go to seek liquidity. So these are the open close here. And price has not taken either the 20-day high nor the 20-day low. Sorry, I made a mistake here by writing high. It was a 20-day low. Then if you look back, 20 days high have been taken already by this rally up movement, but the 40-day low have not been taken. So we consider the 20-day first. After it has been taken, then we'll look back to look for 40-day low and high to be taken. Then after that, if it has been taken, we'll go back to the 60-day high and low to take. But here we can say 60-day high and low have been taken already. So the only place left are the 20-day high, 20-day low, and 40-day low that are left behind to be taken. So we expect to see that price move to this point to take liquidity. But now we're in a bullish trend, and then price is finding support on a bullish fair value, a daily fair value gap. So we expect that the 20-day high should be taken because it has also formed what we call relatively equal highs, as you can see here. Now we can see price reacting at this daily fair value gap here. And this is NFP. NFP usually tends to form the low of the month. And this is May. This is May 1st, 2nd, 3rd, which is also on Friday. And then look at how price rated at consequent encroachment, which is the midpoint of this fair value gap. And then price found support and then printed a daily bullish order block. Now it was validated at the point when this candle here broke this high here. So price retraced, and then I expect that price will find support at the open of this bullish down close candle in the daily time frame. I don't want to see any candle close below the midpoint of this down close candle, which will validate that this is a bullish order block that price would react from. The other thing I would like us to take a close look is you can see here from the high of this up close candle to the low of this up close candle, we can see a fair value gap here. Now look at this fair value gap here. Now price came down, and then look at how the close of this candle, here, it respected this fair value gap. It did not close outside it. And then look at this other candle, so it didn't close outside it. So now means that this fair value gap seems to be respected with confluence with this order block, which is a bullish order block after price found support in this fair value gap, daily fair value gap. Now, one thing I want to see is that today is Monday, so I want to see price close above it. I don't want to see price close below this low, because if it close below this low, then price might actually stall for a while. The probability of price moving from this point becomes very low. But if price closes above this previous daily low inside this fair value gap, I'll expect that Tuesday will be bullish. If it does that, it forms what we call a swing low. A price swing is when the candle to the left and the right is either lower or higher than the middle candle. Now, let me show you an example here. Let's say this is a swing high. Why? Because the candle to the left, the high is lower than the middle candle, and then the candle to the right, the high is lower than the middle candle. So it has formed a swing. When a swing is formed, especially in a daily candle, the probability that the next candle will go in that direction is very high. So this is a bearish swing, price swing. So because it formed this way, the next candle should be bearish. Now you can see another swing formed here. The candle to the left is higher than the middle candle. The candle to the right is higher than the middle candle. Then what do you think the next candle will print? Bullish. So after forming a bullish swing, the next candle should be bullish. So now, if this should fall what I call that bullish swing, then the next candle, which will be Tuesday, should be bullish to take out these high, relatively equal highs, which may happen next week or this week. We don't know. So now let's move to Euro USD. Looking at Euro USD in this range, the daily time frame, we can see how price took this high and then came down and then took the liquidity here, and then price rallied, retraced, broke structure, retraced, broke structure, retraced. Now we are in the fair value gap, at the fair value gap here, and then price respected the consequent encroachment. Now I'm bullish on the dollar. So if I'm bullish in dollar, then I'll be bearish in pairs that have dollar as the quote currency, because if I'm bullish in dollar, then I should be bearish in the other currency. I don't know if you understand. Euro has USD as the quote currency, and then Euro as the base currency. So therefore, I should be selling Euro and buying dollar, if you understand that. So now, price reacted at the constant equipment. It refused to close below, because which is telling us that price is actually respecting this fair value gap for the time being, which is not favorable to my analysis on the dollar, because I expect dollar to be bullish. But we can see that Euro is finding support at this fair value gap and refusing to close below the constant encroachment of this fair value gap. And then price rallied, creating what? A bullish order block. The bullish order block became validated when this down candle broke this high. So now we're seeing that this candle here is respecting the daily bullish order block. And then today is Monday. So now what I would like to see is I want to see that this candle does not close above this previous daily candle. Because if it does, I will expect that this candle becomes a bullish order block for price to rally and take this high, and then maybe retrace or continue to take this high, because we are seeing here that there's a fair value gap that has been left unfulfilled. That's not been filled up completely. It just got filled to this point here. So there is still unfinished business here, which I would expect that price would want to run to close. So now let's go to the British pound quickly. Now the British pound is actually showing a very wonderful price action that is in line with my dollar analysis. So the daily range, now I'm using the body. Now we use confluences. Now I know many of you would not understand this, but as time goes on, as I explain, you'll be able to see what I'm talking about. So now we see from this high to this low, the daily range. If I should draw the same thing here, we'll see a confluence. You see that there's a confluence. The equilibrium match the equilibrium of from the week to the week, the body to the body. You see that there's a confluence. Let me bring it out so you see. So look at, let me make it bold so that you will know which one is from the week. So this one from upper highest body to lower lowest body from here. So look at it here now. You see that there's a confluence from the weeks, you see. So because of that, I'll just use the body. You can use anyone, but you try and look for confluences. So now look at how price took this high and then came down and then found support after taking what? Liquidity and then filling this void to this extent and then finding support in this bullish order block, bullish daily order block. You can see it here, this consecutive down close candle from the bullish daily order block. So now we left this place unfulfilled. So price is likely to come down and close it up. But first of all, let's look deep. Let's look closely to this point. Our price came down, found support in this other block, and then rallied, consolidated for a while, and then took liquidity above, found resistance at the daily bearish order block. These consecutive candles formed the bearish daily order block. And then price reacted, broke structure here, here, broke structure, and then retraced back into this fair value gap. You can see this fair value gap. Now, price has been unable to come out of this fair value gap. So now we are seeing that Monday is printing above the fair value gap. Now, what I would like to see is that we want to see that Monday closes below the previous daily low, just like the euro as we discussed. I want to see that Monday closes below the previous daily high, previous daily high. And then what also increase the probability that this price will run down is when it closes within the fair value gap. I don't want it to close outside. Now it's already printing outside, but I want it to close inside this fair value gap. This will increase the probability that price will want to run down to take these lows, fill this gap, and then take this low, and then complete the gap inefficiency here created by this buy side delivery, and then run down for these lows, and then these relatively equal lows. So that's my outlook on the euro and pound. So if you would want to learn more, I want you to join my Telegram channel where I teach the basics of ICT concepts. I teach smart money concepts, smart money tools, order flows, explaining what those order block mean, breakers, fair value gaps, and so on. So I would like that you join and click the link below. Thank you very much.